that the old conventional theses about uh, reversion to the mean or uh, the sort of traditional fundamental analysis has to be leavened with a understanding of sort of the new era of sort of financial capital as it works now. I think that's a kind of huge lesson that is being sort of metabolized by the market. When the market's up, everything's up. You can invest in anything. Close your eyes, and you're up over 20% almost.
On this episode of Early Bird, what are the most memorable investing themes in the stock market in 2024? Plus, what are the most important investing lessons learned from the past year? John Cook, Senior Investment Analyst at iSectors, and John Engel, President of Almington Capital Merchant Bankers, join the podcast today to discuss these topics. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. All right, everybody, welcome to the Early Bird podcast. Thank you so much for joining us. Today, we are going to take a look back at the stock market in 2024. I'm joined by John Engel, President of Almington Capital Merchant Bankers, and John Cook, Senior Investment Analyst at iSectors. Thanks, both of you, for coming on the podcast today for this very important episode where we take a look back at the stock market in 2024. How are you both doing?
Great. Yeah, same. Interesting year.
Absolutely. Before we get started, I actually have a very simple question. I don't know if it's that simple, but to ask both of you, I'm just looking for a one-word answer. If there's one word that you can say that might describe the stock market in 2024, what word would that be? John Cook, I'll start with you. Is there one word that comes to mind when you look back at the stock market in 2024?
Yeah, concentrated. That's my word.
Oh, interesting choice. And John Engel, is there a word that comes to your mind when you look back at 2024 in the stock market?
I would say exuberant.
Ooh, two interesting words. So John Cook, I guess we'll start with you. When you look back at 2024 in the stock market, what were some of the more memorable investing themes that come to your mind?
Yeah, so last year was a very good year for the stock market, or this year, I should say. Up over 25%, about as of right now. The year before, 2023, was up about the same as well. And this is in the face of, a lot of market participants seeming to feel squeamish, right? We have talks of inflation and high interest rates and the geopolitical problems and wars around the world. But yet we're still up, over 20% 2 years in a row, which is almost double the long-term average for the S&P 500, at least, is about 11%. And we're doubling that 2 years in a row in the midst of all of this, worry, a wall of worry, so to speak. And so it's hard to find something that didn't really perform well over these last 12 months here. But what stands out to me is when in a year where almost everything's up, even, for instance, even gold was up about the same as the stock market, and that has no correlation, right? So even things that aren't correlated to each other are going up 20-25% in a year. What we've had our eye on is Bitcoin. This has sort of been the year of Bitcoin. Earlier this year we had the Bitcoin ETF launched, the spot Bitcoin ETF products launched. And so Bitcoin's up over 150% this year. When the market's up, everything's up. You can invest in anything. Close your eyes, and you're up over 20% almost. Bitcoin gives you something that has quadrupled that return almost. And if we're talking specific stocks, MicroStrategy has earned a lot of media attention as sort of a Bitcoin holding company, so to speak. That's up like as of today, 400% year to date, a little more. And so those are kind of what we've had our eyes on, and what's been really interesting to us in the markets this year. Those outsized returns of Bitcoin and MicroStrategy.
Yeah, we're still standing. You're right. That is, no matter what problems there may be in the world or in the economy, many investments did very well, both traditional equities and the price of both gold and Bitcoin, as well as other cryptocurrencies, jumped this year as well. It really is remarkable to see so much resiliency in the market, especially with so many different types of investments. John Engel, what do you think? What are some of the big investing themes that stood out to you in the stock market this past year?
Yeah, I think John, the other John, already pointed out something very interesting that has been happening in the market, which why I say exuberant in the sense that a more or less bull market of everything that's been going on for almost a decade, but has accelerated remarkably, even as there are apparent dislocations between financial assets and the real economy, and certainly perceptions of the within the real economy. I think John already alluded to this, that the wall of worry, as he said, but also in terms of just real world economic pressures that you see, for example, across the European Union, not only political unrest and dislocation, but rising energy prices, but all actual tipping into recession in many cases. But none of these things have done much to dampen financial assets. I would say that market exuberance has been remarkable and indicative of a fairly unprecedented dislocation from the underlying economy, and but it's not as if 2024 is a unique case in that. It's one of those remarkable things that since really the COVID-19 lockdowns and the sort of remarkable levels of quantitative easing and financial asset support that happened during that period, that has not unwound, has created a sort of perpetual bull market, at least through 2024, as we've seen. But as a result of that, when you start seeing that dislocation, where you're seeing price earnings multiples being at a significantly higher than their 35-year average, even over 30% above that, where you see the top this sort of really enormous mega cap stocks leading a lot of this growth. There's really a lot of remarkable things happening in the financial assets versus the real economy. We also see this is also demonstrable from things like Fed policy, which has never really normalized since 2009, to the point where the new normal is essentially where the sort of perpetual sort of easier quantitative marketplace, and where even with extremely low interest rates, the market kind of got shook, so to speak, a little bit, when Chairman Powell, said that they were going to slow down rate cuts, from already fairly historic lows that they've been at, since the Great Financial Crisis. So it is a multi-decade sort of unprecedented trend. And as the real economy sort of is dislocating more so, it's something to be paying attention to, especially as the uncertainties in the world do not seem to be diminishing at the end of this year.
No, you're right. It's been incredible. You mentioned John Engel, I'll stay on you for a sec. You mentioned the Fed. Obviously we've had somewhat elevated rates compared to the past few years in 2024. And yet it seems that the risky assets did very well this year, Bitcoin and the technology stocks. John Engel, could you talk a bit about the technology stocks this year? Obviously, many semiconductor stocks did very well. Big tech did well. Is this just a result of the AI race, or is there something larger at play here when so many riskier assets perform well, even though rates were a bit elevated throughout the year?
Well, that's like an interesting framing. When we say rates being elevated somewhat this year, they're elevated compared to like history breaking lows that persisted for well over a decade. And when the market has sort of got used to that extremely low rate, that it was through a bit of a temper tantrum when rates were still historically low, even at the highest rate that they've been raised to in the tightening cycle. So you do see that that there is, in that context, if they were to say restore rates to the 30-year average, that would probably cause pretty catastrophic results in financial markets. So that's not going to happen, obviously. They're not even talking about tightening right now. But it is indicative and important to understand that the sort of nature of the Fed's rate policy versus financial assets is different and has been for several years. And this has really been sort of playing out in the last few years. Then any sort of textbook or history would tell you that relationship, how that relationship exists. In terms of risky assets, when there is so much financial capital in the marketplace, an unprecedented amount, and where rates are still low overall, there is a degree of which the hunt for yield is always on. And when you have things like debt markets still remaining, because the base rate is so low, even when it was elevated slightly, the search for that yield, the search for those returns, demands seeking riskier assets. That's why you see even traditionally very conservative large pools of capital like pension funds increasingly increasing their exposure to high risk assets in the search for not just equity return, but also for that sort of income and yield return. So those are all pressures that naturally over time accelerate the demand for those high risk products. Also, in those cases, large pools of capital, one of the forcing functions of that is an aging population.
Oh yeah, that's just the way things are. I think we've mentioned so far what sectors and types of stocks have been doing well. Obviously, tech did very well. You'd be hard pressed to find a sector that really struggled this year, but there were still a few sectors and companies that lagged the broader market in 2024. John Cook, are there any stocks or sectors that come to your mind when you think of, oh, this sector, this company really struggled in 2024? Anything that sticks out to you?
Yeah, the energy sector, absolutely. It's flat-ish, little negative so far this year. The big companies there, Exxon, Chevron, haven't been holding up any of the broader energy stock indexes. That's for sure. Basic materials is another. We have a sector rotation model where we, dynamically allocate to different sectors every month. And basic materials, we've had to sort of, in and out position this year. And that's been another sector that really hasn't been able to keep up. More of these defensive sectors, right? More value-oriented sectors, and that's specifically the case with energy, have underperformed, given that sort of the appetite for risk that John Engel discussed before. It's just sort of, it's left more of these defensive plays by the wayside.
Oh, yeah. John Cook, you brought up a great point. Some of these defensive sectors have struggled this year. Why do you think the defensive sectors are struggling this year? Is there something about the nature of investments this year, or any macro trends that might be contributing to the struggle for these defensive sectors in 2024?
Well, I think it's partially the sort of risk appetite of the market. John Engel touched on before. He mentioned the liquidity hasn't really been unwound from the large amounts of quantitative easing through COVID-19, and that's absolutely true. I mean, the money supply, if you look at a money supply chart, M2 or otherwise, it blew up during COVID, as they pumped stimulus into the markets, and it started pulling back a little bit as the Fed was raising rates. But that and now, if you look recently, the year-over-year money supply is increasing again. So that you're not going to get all the liquidity. They say, the toothpaste doesn't go back in the tube, as they say, and that money's in the system, and it's just, especially with now the Fed cutting a little bit here. Obviously, the bond market doesn't really agree with that, I don't think, but they've begun cutting, and who knows if they'll actually be able to keep rates as high as they would need to be truly restrictive and sort of pull back some of this liquidity that's in the market right now.
Good point. John Engel, are there any sectors or stocks lagging the market that stand out to you in 2024?
Sure. I'd agree that defensive plays in general have performed not poorly by comparison. Deep values oriented stocks, not as well. And then you have sort of big name players that have just had disastrous years. Boeing, being one of the sort of poster children of the mass failure of certain kinds of management styles that have damaged a lot of companies in recent decades. That they're sort of unwinding a sort of fundamental management failure. They're down close to 40% this year after having pretty bad years before that. But it is sectorally definitely a function of stocks that are seen as safer get less have definitely lagged those that are sort of the other sort of tail end of the bullwhip, and that's to be expected in this fairly flush with liquidity financial system at the current state of things. And as the other John said, the fact that monetary policy isn't changing significantly, and the sort of growing money supply isn't changing, and there is it has to be accounted for. And at the same time, you have to factor in the fact that no political party, not even the Fed leadership, which are theoretically apolitical, seem to be willing to jump on the obvious political grenade that would happen of trying to even get near what would have been considered through most of the Fed's history normal monetary policy.
Yeah, the Fed plays an outsized role in what's happening now in the stock market for sure. We're about to enter a new year, 2025. And so as we wrap up this discussion on what happened in the stock market in 2024, were there any lessons learned from this past year that we might be able to apply in the new year in 2025? Anything we learned about the market or investing that we could apply next year? John Engel, I'll start with you. Are there any lessons learned from this past year that we might be able to apply in 2025?
I'd say that one big one is that in a system where U.S. capital markets are dominant and will remain so for the foreseeable future, where the economic base of the U.S. is still going to dominate the capital market structure, there is always almost an unprecedented amount of room for expensive things to get more expensive, and expensive stocks to get more expensive, so to speak. So the lessons of this year have been that it's important that the old conventional theses about reversion to the mean or the sort of traditional fundamental analysis has to be leavened with a understanding of sort of the new era of sort of financial capital as it works now. I think that's a kind of huge lesson that is being sort of metabolized by the market and has been for a while now. But with 2024, where we see the market, as John Fudge said, outperformed by about double the long-term rate of return in general, from an already high years of market growth, that it is kind of a new world that the way we still talk about stocks sometimes doesn't reflect that.
Absolutely. It's a very different investing world we live in now than decades ago for sure. John Cook, I'll let you close us out. Are there any lessons learned from 2024 that we could apply in 2025 in the stock market?
Well, we're an ETF shop. We're an ETF investment strategist at iSectors. We've the ETF vehicle structure we've liked for a really long time. We've preferred passive investing over active investing, at least in the equity markets, large cap equity markets, for some time. And this year has sort of, to me, reaffirmed that a little bit. Trying to get too fancy, right, and trying to go against the wave of the market at times in the last 2 years with all this, as I mentioned earlier, everything else going on, all the noise. The markets continue to persist and continue to throw off these twice the historical norm gains. And it reminds me of a phrase that I've heard fairly recently, that it just makes a ton of sense when you're digging into all of the investment processes and you're reading economist research and things. Pessimists sound smart, but optimists make money. And that is sort of what I've been thinking about this year. If you get too worried, with the wars, the Fed, the interest rates, the election, if you would have been too defensive this year, you would have been left behind.
Thank you again to John Cook and John Engel for sharing your insights on the stock market. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.